If you want true peace of mind, you want a quantum native asset. Eventually one day, quantum computers, just because of their architecture, will be really good at breaking types of encryptions that we've decided to go for. The main problem we're running into right now is that post-quantum schemes, they require super large signature sizes. Biggest bottleneck is just research.
Today we have Ross from MultiVM Labs. Ross is our senior software engineer, Ross Nkama. Maybe you can introduce yourself though.
Yeah, I'm Ross. Been working with MultiVM Labs for a couple months. So I'm a senior software engineer, mostly doing work on building the layer one and researching the bits and pieces and how they all fit together to make a fully quantum-proof L1 from top to bottom.
What was your background? What did you do before in your life?
Yeah, I did a bunch of stuff. So I did from AI at big companies. So I started off in big tech. I decided it was shielding me from a lot of the processes that smaller companies get involved in, and I had a too large a distance for my liking to the customers. So I wanted to actually get my hands dirty. So that's why after Google, I decided to start contracting. So that gave me the widest breadth of companies to work with. And eventually doing this, I learned about the crypto industry because I got to jump around a bunch of different industries to figure out what I like doing. So yeah, I liked the promise of decentralized ledger technology and decided to work in that full time for the last maybe 2 years.
And so the last 2 years you're working in the blockchain industry and Web3, as we call it. What are some of the things you've seen in the last 2 years changing in the industry?
So I joined quite late, so I missed the whole cypherpunk era. I kind of have nostalgia for an era I didn't experience. So I wish I joined a lot earlier, just to see what the community was like back then. But yeah, one thing I've noticed is there seems to be a regression from pure speculation, like meme coins and NFTs back to utility, very slowly but surely. So I think that's the thing that's exciting me the most, at least in recent history.
And utility in terms of financial utility, or utility in terms of what the underlying technology can actually do? Because I think there's two different paths here, right? One is yield-bearing assets or the financialization, and the other is cryptography itself. What can it do?
Yeah, I think it's completely across the board. So yeah, I'm really impressed with the DeFi, financialization side of things. Finally, we can trade stocks on-chain permissionlessly. We can we can trade stocks. A bunch of asset managers are moving to tokenize different assets, like housing, for example. We don't know too much about the second order effects, but there's a lot going on in crypto right now. And I think the total value across all chains, across all ecosystems, more and more it's getting purer and purer. So the money is actually pointing to real utility.
So we're here at the QIP, which is a Quantum Information Processing Conference. And did you have some learnings while you've been here listening to the talks? I understand it's a new field for you, but can you draw inspiration from this area?
Yeah, so I dabbled very lightly in quantum research and stuff like that maybe 6 years ago, 4 to 6 years ago. Back then there was a lot of paperware and vaporware. There were some promising signs with it as well. So the Q-Day threat was always there, knowing that eventually one day quantum computers, just because of their architecture, will be really good at breaking the types of encryptions that we've decided to go for, with DLTs and other traditional applications as well. But yeah, I think from coming here, I realized there's a lot more forward-facing research. So that there's a lot more applicable research that you could pretty much play with today. There's a lot of open source libraries. There's a lot of researchers working on really important things. So real cryptographic primitives that you can find some kind of library on GitHub and download the source code and actually start playing with it. So yeah, I think it's slowly maturing, and I think there's actual real utility, and it's quite a big breadth as well.
And touching a complete different field, something we are talking every day in the company, is artificial intelligence. And I think you are uniquely positioned maybe to answer some of those questions, since you have been working in AI as well, about the big trend of I wouldn't call them tools anymore. I would call them AI operating systems, right? Stuff like CloudBot, stuff like Cloud Code, right? Or all the additional stuff going to Cloud Code, also Codex. Everyone has his own stack, and one gets the feeling every day we are progressing faster towards a fully autonomous coding agent. And maybe you can describe to me what you are using yourself, what you find helpful, and where you think the journey is going with that.
So for me, I break AI use into two categories of like when and how you should use them. So the first is if you're doing something difficult that you're not too familiar with, and there's like learning and lots of unknowns. And the second is if pretty much you know exactly what you're doing. You're building like a somewhat simple product, which you can quite easily spec down. So like these are the two buckets for me. So with the first bucket, I see a lot of companies like kind of jumping on AI without planning very well first. Like they're trying to solve difficult problems, but you can't just throw like AI at those type of problems without the whole team having really strong competency first. And then on the second hand, there are people solving like pretty repeatable, specable problems, and I'm seeing them get like 10x the output that they would have got otherwise. So these are the two buckets, and what you want to do is you want to become really competent in your stack first. So like we're working with like cryptographic primitives and stuff like that. If you don't know what you're doing, then you won't be good at steering the AI to the output you want. You won't be good at prompting. You won't be good at reviewing what the AI creates. So first step with every team is to get to some kind of baseline competency where you can be sure that AI is easy to navigate. So that's what I'd say. The whole point is to move from the first bucket to the second bucket. So once the whole team that's working on the really hard problem, they reach that baseline, then it's easy to decompose complex problems and workflows into much smaller bucketed ones and then solve them all individually with AI. So skill up first and then optimize later with AI.
And for someone who's now overly investing in every stack which comes out, and we see this CloudBot, which maybe is the most close thing to an autonomous agent or an AI assistant. Do you think we are going into an age, or this year maybe, where we will have everyone becoming just a pilot for the AI, and it doesn't really matter what you understand about the topic and not, because the AI will do majority of the work?
I still don't think so. I still think the people who have the strongest edge are the best context engineers. They understand how to start at zero, engineer the peripheral information that you need to get tasks done, engineer the AI workflow itself. So what I mean by that is like AIs aren't, so the best models, they aren't infinitely scalable, right? They have context windows and stuff like that you have to manage. With certain problems, you can't rely on the AI to self-manage those context windows. So like if you have kind of basic understanding of how context works, you can put together a basic pipeline which like helps you optimize how you're managing tokens from top to bottom. So it's little things like this which I think people need to get the most out of AI. I still don't think we're there yet where the like tooling that's happening behind the scene with things like Cloud Code are super efficient at managing context and like a bunch of other variables that need to be managed.
But do you see a road towards that?
Yeah, possibly. I think, well, actually, definitely. I think at some point we will get there, but I'm not good at timelines. So it could be in the near future, it could be far away. But at least for now, like in the super near future, really good context engineers will get the most out of AI.
And what I read often, or not often, but I read today, is that due to the fact that now the masses are being elevated in a sense, right? Anyone without a formal education in computer science or formal training can build or wipe code, whatever you call it, a website, even a SaaS product, anything which is tangible in a sense. And therefore, more qualified teams with expertise in doing hard challenges are moving into hard tech problems. Nuclear sciences, pharma, bioscience, anything which would be maybe time constrictive, maybe also too much capital intensive in the previous years, that the next wave of startups, or to count as a startup, you'll be basically solving hard tech problems, and everything else can be solvable by the AI itself or by people. Do you think that is true?
Yeah, I think that's pretty much a perfect summary, especially for the near future. I think that's a perfect summary. Like really commoditized, like SaaS, for example. There's 2 million SaaS companies and apps being pumped up per day. It's quite easy to do if you have like just a basic understanding of like client server architecture and stuff like that. But yeah, I think for a long while, like hard problems which like require deep domain knowledge and research, I think the bar for talent will keep getting shifted up and up and up, like as time goes on. But yeah, I think it will be the only way to stay relevant.
So in order to keep the edge, you essentially need to solve harder and harder problems, and this elevates us as humanity to solve maybe the hardest problems in a sense.
Yeah, I think it's a filtering process too. I don't think we'll all move together. I think just the best of us will incrementally improve and slowly get filtered out. Then maybe
What will happen with the ones which are not progressive?
No idea. That's for politicians and people like that.
Okay, and in particular now with Quantum and MultiVM Labs, your job is pretty hard technically. So you're trying to take the years of accumulated research in layer 1 design, a layer 2 design, a network design for distributed systems. And now we have quantum cryptography, post-quantum cryptography, different encryption schemes. Is there a difficulty taking, let's say, a lattice-based encryption scheme, like, I don't know, the lithium, and just replacing it with a ECC-based encryption scheme? And where's the difficulty there?
Yeah, so I guess the main problem we're running into right now is that post-quantum schemes, like especially like lattice-based, they like require super large signature sizes, and like we're in the business of distributed computing, so we're getting end computers to talk to end computers. So if the payload between these computers getting sent over the network is super large, then the stuff we're trying to do on chain like won't happen in a way that feels good for a user, like waiting 100 seconds, for example, for a simple swap to go through, or waiting 2 minutes for a validator round to consolidate. So yeah, the main problem we're seeing right now is issues like this.
And what are some solutions? What are you suggesting we could do to decrease the? Is the solution to decrease the message size, or is the solution to increase block size, or both?
Yeah, we're experimenting with a bunch of things. So first, the research-heavy areas. So like, there are some classical primitives that exist which make consensus possible with certain consensus algorithms. So like, for example, like BLS aggregation, where you can take certain signature schemes and you can aggregate against all the nodes in the network during consensus, so that the complexity only looks like the complexity is only equivalent to pretty much one signature being seen. So with like lattice-based signatures, there's no cryptographic primitives for doing things like aggregation. So one area we're looking into is actually building these cryptographic primitives. So this is more on the research track. But there's also an engineering track, which it still has like heavy elements of research, but it's more applied and it's easier to throw out experiments and validate against it. So yeah, the second engineering track is more practical approaches. So like reconfiguring how consensus works at certain points to make sure that we can like potentially mitigate for the large cross communications of like large signatures, or yeah, basically things like this. So I think it's separated into two. One is research primitives that allow us to replicate mechanisms that we have in the classical world to work for post-quantum signatures, and engineering solutions as well, like just reconfiguring how consensus works. And Yeah, so that's pretty much.
There's also this discussion we had a couple of weeks ago about quantum algorithms not necessarily maybe being the best for classic computers, and at the risk of that, right, having maybe lattice-based encryption, but maybe a classic computer can break it, right? That is kind of the fear. And one of the proposed solutions is that you have, not just for us, but like generally the proposed solution is you have a hybrid model where you have the classic encryption of ECC, then behind that you have something like a PQ encryption. But that kind of adds even more data and even more sizes in my understanding. So any ideas around this hybrid model, or is it necessary? Is it something you would advise, or is it something where you're just overly cautious?
Could be. So at least in the context of like distributed computing, like decentralized ledgers, it could be a decent compromise. So it's another research track we're going down. So the reason I'm saying it could be a decent compromise is we can take cues from other networks. So like, for example, optimism. In our case, we can optimistically we can optimistically say that all rounds that have been validated against, like there are no bad actors, and a node in the network can say, oh, like something doesn't look right here. It signals to the network that something doesn't look right. And we go back to our last checkpoint in consensus, and we run like post-quantum algorithms to prove everything. So these are the really heavy, slow algorithms. But that's fine because most of the time there isn't a bad actor. So that's one of the areas where you
So it would be like an optimistic roll-up almost, but with the PQ testing doing it once in 7 days, let's say.
Exactly.
Once in a day.
Yeah. So you accept the negatives of the new technology, but because the network has a like most likely happy path that's always being encountered, the performance impact is almost negligible in like the real world.
But what would be the biggest bottleneck, you say, to have like a fully PQ encryption in a layer 1 today?
Yeah, so the biggest bottleneck is just research.
Yeah.
It's likely that you'll have to make up new cryptographic primitives or change the architecture of how consensus is done to make it work efficiently. I'd say that's the main.
Do you see yourself contributing towards that? Do you think it's a very valuable thing for our future to have quantum-resistant, decentralized, credible neutral networks?
Yeah, for sure. I think that's what I've seen in this event, which is kind of what got me excited. Like a lot of people are working on these primitives that we'd probably be using to make this L1 work.
And on speeding up a layer 1, parallelization, parallelism, we heard a lot about this last year with Monad, alternative virtual machines like SVM, comparable to EVM, and also an alternative would be WASM. What's your view on all that happening? And can we incorporate some of those best practices already?
So my view on parallelization is that it should be global and state-based. So what I mean by that is, I believe all state on the network should be sharded into little pieces, and the network parallelizes consensus across all shards. I think that's the best sharding model. So what chains like Solana and Monad and stuff do is they shard at the node level. So it makes execution and verification faster at the node level. But I think this should definitely happen on the network level. So like in our case, it could be quite a big advantage. So the reason why is because like you can imagine. So let's say we have our network and we have 5 different shard groups. So these 5 different shard groups are all working on local consensus for like a batch of transactions that have just came in. So what this means is we've effectively cut the validation time by a fifth, depending on the transaction makeup, obviously. But it potentially allows us, if the distribution of transactions is very well sharded, it potentially allows us to use these heavy PQ algorithms because it's only small validator groups talking to each other. So like maybe 5 nodes talking amongst each other. So
is this comparable to cluster. If you play like video games, let's say esports, you have a cluster of, let's say, a server, and then you basically play, let's say, on the West Coast server, and the latency only travels through the West Coast.
Not quite. It's more like, okay, so this isn't a good analogy, but like imagine you had a group. Imagine you had like a room full of 25 people, and the task you want to do is, let's say, you want to get everyone to stamp their approval on a piece of paper that something happened or didn't happen. So one way you could do it is you could. So like I'm like really oversimplifying it. But yeah, one way you could do it is, let's say you just queue all the 100 people and they stamp one after the other. Another way you can do it is you can break the groups into you can break the whole group into a group of 5 and split the work amongst them.
So basically split the contract.
Exactly. So what I was saying earlier is chains like Solana, they do this at the node level. So it just means execution is faster, verification is faster, but ledger aggregated transactions still get pushed like almost in a queue. They all get processed at one particular point, whereas if you have state-based parallelization, so actual state is sharded across different networks within the same chain, then you can truly break down tasks into you can truly break down tasks to be broken down in parallel, like in the global scheme of things. So that's why I prefer like state-based parallelization.
And can you combine that with something like a first order, first come methodology of, let's say, block building? Because one of the major issues I have personally encountered with asynchronous computing or sharded computing is that if you don't have a set finality for a block, it's very hard for, let's say, market makers or map builders or block builders to know when a transaction will happen, since it could be now or it could be, let's say, in 4 seconds. So they don't want to market make on the chain, or they don't want to do professional trading on the chain, since it's impossible, let's say, to know when a transaction will be included. There is no set rule for that.
Yeah, I'd say that's not necessarily a bad thing. So I think a good chunk of strategies that rely on execution speed, a good chunk of them are like malicious, so they're bad for the user. So like one example is I'm about to submit a swap on Uniswap, and a like hedge fund or whoever, they see my transaction in a pool with everyone else's, and then they decide to sandwich me. So they basically buy a little bit before me, and they sell right after me. So I ended up my spread increases, so I end up losing more money. So yeah, technically by making this harder, you're eliminating this class of like strategy. So that's actually better as a whole for the user. But it still keeps a lot of the good mev. So what I mean by good mev is stuff like arbitrage. So you've got one exchange trading a token at a slightly higher price than another. That's not good for the user, because if no one corrects it, eventually the prices will drift so much and the user won't know what the real price of Bitcoin is, for example, on your chain. So like on Ethereum, they'll see on every single market, it's like $83,000 or whatever. They go on your chain, one market, it's 17,000 and so on and so forth. So this doesn't rely too much on execution speed in the same sense. Or it does, but it doesn't rely on execution speed relative to, like breaking in front of a transaction to like manipulate things. This is a bit different. So you don't need to monitor the supply chain in the same way. So yeah, just to sum up, I'd say it's not necessarily a bad thing.
And how fast could, what I'm touching here on is more finality, right? And why I'm asking this specifically is about order book based exchanges, which are centralized and have a very fast finality, because they're mostly on one server. So you have something like Amazon, and then Amazon has, let's say, their service in Japan, and one famous crypto exchange, and many famous crypto exchanges are hosted there. And so since they're all hosted there, the finality of their order book is very, very fast, right? There is the other thing of trusting them, though, but the thing is, if I'm a market maker and I place my inventory of 2 positions into the order book, I kind of know how fast it is, right? And I can either show inventory or delete inventory from the order book
Yeah.
as fast as like maybe trying to balance out market risk with that. And if I see that my prediction of the market for the next hour was super wrong, and something happens, I can delete my inventory.
Yeah.
Right? So I'm not filling orders anymore. And that is interesting if I can use this same inventory in the same speed across all its axes, so I can have an arbitrage, right? So I'm showing inventory on all its axes. They have all let's say almost the same finality, so I'm showing inventory everywhere, so I can use this advantage of being market making everywhere to maybe get an arbitrage advantage. And then if I include on-chain products, then every millisecond of slower finality adds more risk to my inventory because I have to block inventory everywhere, plus the gas fees if you count them in, and a slower finality are arguments for me to exclude a chain from my market making activities, but include more centralized chains, which are just either cheaper or faster, or both ideally. Do you think this is still compatible with sharding? Can you have a sharded system which still inherits these properties of a very fast, very fast finality, and also maybe that's an economics issue, but maybe low amount of gas fees cost?
Yeah, I mean it's definitely possible. Just like I haven't looked like deeply into this specific topic, but it's definitely possible. You just I'm sure there's a like architecture that you can come up with. Like I'm sure there's one that already exists on different. So I know there's like chains like Sharding and stuff like that exist.
I mean, Near is famously a blockchain.
Oh, Near as well. Yeah. So yeah.
But that's more specific problems. Let's say the Near protocol where the chain is sharded and therefore the finality is just very slow because your chunk of a transaction could be spread around multiple blocks, for example. And it's not until your transaction finalizes, could be like 2 blocks, could be 1 block, and that is horrible for market makers since they cannot rely on a let's say first in first out sequencer or something.
Yeah, I don't think they're like I think it's definitely hard to do, but I don't think they're fundamentally incompatible. I don't know too much about this specific problem, but yeah, I mean it also depends on what your chain is trying to do, right? So like Monad is positioned as a chain for like high frequency trading. But what if you just want to be a simple asset layer for holding long horizon assets? What if you want to do a bunch of other things? So it also depends on what you kind of want your chain to do. So,
so with quantum resistancy, the idea would be that any asset minted on this chain and also the native asset are resistant in a post-quantum computer world. One challenge here would be to say, and I'd like to hear your opinion about it, is let's assume you have an asset like Bitcoin, right? And Bitcoin today is trading, let's say, at $80,000. And I know that in its current state, the encryption it's using is not quantum resistant, right? But I don't know when a quantum computer attack will happen. So if I sell my Bitcoin today, I might be losing some alpha, right? Sure. Let's say I might be losing exposure to the asset class in whatever way I want to express this, long or short. And if I lose exposure, maybe I'll lose out on big profits until a quantum attack happens. Right? This could be in 3 years, let's say. And therefore, I don't want to sell my Bitcoin. Is there a way to save Bitcoin? Or is it fundamentally flawed because the original asset will always go to zero?
I'm not too familiar with the Bitcoin stack itself.
I mean, it's not quantum resistant at all.
Yeah, so
unless they upgrade it, sure, but right now it's not.
Yeah, that's just from what I understand. It just does one thing. It's just about the Bitcoin asset. So I guess any attack, even at the consensus layer, pretty much would make the asset useless.
Yeah.
Even if you quantum proofed it on another chain. I don't know if the asset would necessarily go to zero exactly, but only the quantum proofed asset would be considered safe, like the circulatory like a safe circulation of Bitcoin. So in general, yeah, if a quantum attack did happen, just because of how monolithically built it is, the asset would go close to zero. What was the original question?
So basically, you cannot use a bridge just to make it as to quantum safe.
Yeah, yeah, basically you can't just bridge. You need to make. Yeah, but bridging is a crazy amount of work because there's so many moving pieces that you need to make sure are also quantum proof. So yeah, you can't just bridge. At least for now, like maybe then from now to the next 10 years or whatever.
If they
you
change
want
encryption, it could be done.
Yeah, if you want true peace of mind, you want a quantum native asset. You know, that's originates on a quantum safe chain. And of course, people can bridge out of it or whatever, but that's at their own risk. But the most of the supply should live on a quantum proof chain built from the ground up.
And are there risks of Texas working with quantum? Because we don't have. I mean, this is just a theoretical. Because this is an area actually we need to work on.
Yep.
But an area which does. Which is complex in a sense and doesn't have a real answer. So let's assume you have a quantum resistant asset which is minted on a quantum resistant chain. And now you also want to have this asset on a TEX, right? So there are two ways to do that. Either you convince a TEX that they integrate your token standard, that they integrate your blockchain, so they have basically a wallet on your chain, and then they have custody of these assets on your chain, and whatever they do on their tech side, that's their thing. I mean, they could do it centralized, right, for the users, etc. But if you cannot do that, especially if you're a young chain, right, with, let's say, a young trajectory, they don't trust you, or they don't want to take the hustle of integrating you, what would be a clever workaround to bridge the native asset to let's say, a ERC20 standard or Ethereum, and say, look, any user who buys it on its X, he can get a representation of the quantum safe asset on its X, and he is always allowed to bridge it as long as it's a wrapped, let's say a wrapped qubit token. But like unless he has his own custody on a quantum resistant chain, it's not quantum proof. Would that be a workaround which might work?
So yeah, pretty much the main rule of thumb is as long as the supply is only mutable on a quantum proof asset layer, then the asset as a whole is safe.
But if I hold, let's say, wrapped qubit on Ethereum, and Ethereum gets broken from a quantum computer, that's my own fault. The qubits,
your wrapped asset is gone, but
but the original qubit,
the general integrity of the asset is still safe because its mutability is on a quantum proof chain.
Okay, that is an important factor for users.
But
do you think in the future we'll have a classification of quantum proof and quantum not proof chains?
Yeah, I'm sure. So like one benefit plus downside of Ethereum is how modular it is. So it makes it really annoying to build certain things on it because of the complexity and the different vendors. It's like account abstraction, for example. There's a bunch of different companies who've implemented like ERC 4337 and other ERCs. They all have slightly different takes on it, so it just becomes a real headache to, if you ever tried integrating with like one of these ERCs, a lot of the time it's like a big headache. But a benefit of that is also how modular it is. So without quantum proofing the whole of Ethereum, you can quantum proof little bits and pieces. So you can say, you can build a smart account which has quantum proof vaults, and the signing of transactions happens off chain with like whatever infrastructure you need to make that quantum proof signature stuff possible. So in theory, you could have a fully quantum proof chain end to end and bridge an asset to Ethereum. The user just uses their smart account to like lock it in a PQ vault, like an Ethereum PQ vault, and like now the asset's safe and they can hold it on Ethereum with the UX of seeing everything in one place. But they still get the base layer guarantees of the fully quantum proof chain. So that's...
That will be, in my Ethereum thinking, I mean, we are all Ethereum filled, I would say, for the last 5 or 6 years, since undoubtedly it's the best chain out there, which has the most modularity and contribute the most to decentralization in the programmable chain space, obviously. That would mean I have a layer one or infrastructure which is quantum secure, distributed or decentralized, whatever the consensus is, etc. This infrastructure produces an asset, which has the cryptographic asset definition. It's not replicatable, it's not double spendable, and it's quantum secure. But to make this asset more usable in Ethereum, I could use a quantum abstraction to have a quantum proof vault. Would this quantum proof vault exist on a piece of off-chain architecture, or what do you mean? How do you make this quantum vault proof? So I understand there is Ethereum, the L1, right? There is XYZ, or there's quantum or whatever chain, which is like another L1, and this has quantum guarantees. And now we want to do something in the middle. What is this part in the middle?
So like it's just a thought. So, but in theory, what makes an asset safe? So what I mean by safe is, so let's call it user safe. So what makes an asset user safe? So what I mean by that is you open your wallet and you see the asset is still there. So that's what I mean by user safe.
So no one can steal my
no
private key
exactly,
and take
or like start rewriting your transactions and stuff.
Okay.
So what makes an asset user safe is that there is a, when a user signs a transaction related to that asset, it's the signature is quantum proofed. It's using a quantum proof scheme. So that stops like a bad actor from in the future pretending to be the user and saying transfer to this address.
I use a quantum computer, break your private key, and now I can steal your asset. That would prevent it.
So I'm not too sure of the specifics, but with like account abstraction, for example, you can build off-chain infrastructure that takes over parts of what a built-in wallet would usually do. So by default, so by default in Ethereum, accounts are just like super dumb key pairs. So it's just you generate a private key, then you use ECDSA to like create the public key based on that private key. And that's pretty much all an account is. It's just a private key pair. And like asset ownership and stuff like that, it all lives in smart contracts. So the general thought is if a user, so I'm not sure how much stuff within like smart contracts and stuff like that you need to retroactively change to, but the base law is if a user signs transactions with a quantum proof like cryptographic scheme, then an attacker can't an attacker can't forge user authorized like operations. So like stuff like transferring out of the user's wallet and things like that. So that's what I mean.
So that could mean, if I understand this correctly, if I have a quantum proof asset, which cannot be, the consensus cannot be changed by quantum proof, it cannot be hacked, the network cannot be hacked. There could also be a quantum proof bridge to Ethereum of this asset.
I mean there could be.
Well, that means it kind of, right? And I wouldn't really care if Ethereum gets hacked. I hope it will never get hacked. But
worst case if the land of user operations is like quantum proofed, then your assets are safe. The only problem is like valid consensus might stop working because like
you couldn't bridge it out anymore, probably.
Like the network just wouldn't work. So your assets.
Could there be like a escape hatch if, let's say, I have qubits on quantum, I take my qubit, I bridge it to Ethereum using this quantum bridge, and we use a quantum abstraction to make it safe from a quantum attacker. And assuming Ethereum gets the Ethereum layer 1 can't upgrade fast enough to quantum resistancy, something happens to these coins, something happens to their chain, the quantum computer breaks Ethereum. Now all the trust in Ethereum is gone, it goes to zero. But since qubit is quantum resistant, it stays at the value it is, or drops in value, or rises in value, it doesn't matter, but it's still there. And the PQ bridge holds quantum in a sense, even though it's an ERC20 asset now, but a user cannot steal it, or the attacker cannot steal it. I technically possess my quantum. The only risk is that I might not be able to unwrap it.
Pretty much, you won't be able to interact with it because the chain.
But there could be an escape hatch being built where I can somehow prove that I'm the owner and with a ZK.
Yeah, there could be an escape hatch like that, or you can just wait for the Ethereum Foundation to solve the validator problem, and then you can transfer later.
Well, that's an interesting take. I haven't noticed. That's pretty cool. Ross, I think we'll talk again. probably tomorrow. But in front of a camera, I think this is pretty cool. Thank you so much.